Give you the markets update now. This new trading week begins with investors forced to price in even higher peaks for US and European interest rates. Other factors include sluggish bonds and mixed dollar performance. For more on market activity, we're joined by Greg Katzenellenbogen, the director at Sanlam Private Wealth. Greg, good morning to you, and thank you very much for your time. Let's start with the global market activity on the back of, which basically begins on the back foot after last week's losses. What is expected in this new week of trade?
Well, I think it might be more of the same. You've had a situation whereby, the market gets behind a specific theme, and that has been that the US Federal Reserve might go on hold with interest rates, and the market then takes its cue from that and then rises, and then suddenly inflation data comes out and it looks like that it's still sticky, and then the market sells off, and it's this never-ending cycle depending on which side of the fence you are. But at the moment it looks like that inflation is quite sticky in the United States. So while the Fed might still only raise their interest rates by 25 basis points when they next meet, although there are some calls for them to raise it 50 basis points, I think what it means is that they might be coming close to the hiking cycle, but before they start cutting rates, we will probably enjoy a period of extended rates at these levels. It's unlikely that they will cut it too soon, but of course there is the risk that the Fed makes a policy mistake and keeps raising interest rates beyond what the US economy can bear. The problem is that if when you raise interest rates like they have done in other countries around the world, you need time for these interest rates to take effect, and we haven't really seen that happen. So I would be surprised if they were to go beyond 5.5% in the US.
Yeah. While we look at the global market activity and indeed these factors, let's talk about the emerging market currencies and how they expected to perform, starting with our very own Rand here in South Africa.
So look, the Rand obviously does move in tandem in opposite to what happens to the US dollar, and all emerging market currencies move that same way, that if the dollar is strong, you will have weaker emerging market currencies. But the Rand has certain of its own issues that certainly play a part as well. So last week you saw that although the dollar was strong and emerging markets currencies were weaker, the Rand was weaker than many of the others emerging market currencies. So that meant that people had probably priced in the grey listing, as well as the fact that Eskom at one stage went to stage 8 without it telling anybody, and the simple fact is that if you don't have power, you can't grow your economy, and so the Rand will be reflecting that as well. As for the outlook, it's probably trade in a narrow band unless we see a much stronger US dollar, but the outlook for the dollar in the very short term is that the dollar is strong. But if you go over a 12-month to 18-month it's likely that you will see a weakening of the US dollar, particularly when the US Federal Reserve goes on hold with its interest rates. So I think, it's one felt that the Rand was looking good, and at one stage might even break the 17 to the dollar. It looks like it's going to trade around this 18 Rand level for some time yet.
Sure. Let's focus the attention on domestic matters. How has the market received the news of the country being placed on that dreaded grey list? What's been the reaction so far?
Well, I think this has been flagged for some time, so it was in. I think the main effect was the Rand, but in terms of the market was really following what was happening in global markets, and especially the US market, which was under pressure. But I think effectively the market has thought, well, look, South Africa I think there was just 8 sticking points that they still have to give the FATF the assurance that they've got it under control. So they have made some progress. So with a bit of luck, we might only be on that grey list for a year. But I think the market had probably priced that in at the moment. What you haven't priced in yet is going forward, how it will affect the cost of doing business, particularly for banks and anyone in doing business offshore. But the jury is still out on that. But as far as the market, it's probably priced that in already.
Yeah. Let's talk company news in brief. Nampak planning to shed jobs. What are the details there?
No, well, I think that you will find all, things you're starting to see. I mean, Telkom as well looking to shed 15% of their workforce. And in an economy like we have at the moment, where you've got no power and where businesses are struggling and the costs to keep their businesses running, it's inevitable that the market will, that companies will have to lay off staff, and that is, I think, is a big problem going forward, because it might not be the end of job losses certainly in the manufacturing industry, because if you can't keep the lights on, people are sitting idle, and the cost of trying to keep the lights on just becomes extremely onerous. So I expect more and more companies to start, looking at whether they can cut their workforce. And unfortunately, that's not a good thing in a country that we already have so much unemployment.
Yeah. Let's talk Hulamin. It sent out a trading statement flagging decreased results in its performance for the year ending December 2022. Talk us through those developments.
Yeah, so I haven't had a chance to study those in depth, but I would imagine that a lot relates to the fact that, power issues and that, but unfortunately I haven't had a chance to study that in detail.
Yeah, all right. Let's leave it there. That's Greg Katzenellenbogen. He is a director at Sanlam Private Wealth. Thanks indeed for that markets update. All right.